Good morning, everybody. All right, they told us our job was to wake you up this morning. Are you feeling awake? All right, good. It is such a pleasure for us to be here with you today to talk about T-Mobile US. And, you know, I guess I'm getting to be a T-Mobile old-timer because this is the third Capital Markets Day since I've been a part of the company, since John Ledger came in 2012. And we're so delighted to be able to talk about the future of our business. Now, before we get started, there is, the legal disclaimer is not even going to be shown. Oh, there it is. Please, everyone, I'll just stand quietly while you read this. This is very important. There will be a quiz later. Tim has promised prizes for people that pass the quiz later, so that's all for you. Listen, this happens to be the 5-year anniversary of the Uncarrier. In May 1st of 2013, we came together with Metro PCS to create the new T-Mobile as we know it today. And when we were here in 2012, we talked with you about our aspirations for that combined company when we would launch the Uncarrier. And it was 2 months after this visit in 2012 when we decided to become the Uncarrier and really made our initial declarations about how we would change wireless forever in the US industry. We shared some aspirations with you then. We said that we could do 3 to 5% revenue CAGR over the next 5 years. We said we could do 7 to 10% in EBITDA. We said that by the end of the 5 years, we'd have EBITDA margins in the 34 to 36% range. We were back together in 2015 and updated all those things. We said, no, actually, it's 7 to 9% CAGR in revenues. 7 to 10% EBITDA holds. And what's happened is we've delivered 10% revenue. We've delivered 37% was the EBITDA margin last year. We're delivering 13% free cash flow growth CAGRs over the last 5 years. So what's happened is we set a number of aspirations for a combined company. We updated them in 2015, and we've delivered on every single thing that we've promised this market. In fact, every quarter we provide guidance to the business, and Braxton's able to take people through the business and futurecast on a number of metrics. We're 20 quarters in to being a public company now, and we've never missed a quarter when it comes to the aspirations that we set on an annualized basis. Every single annual commitment that we've made to the street, which we've updated successively throughout each year, we've met or exceeded by a lot. We've never decreased those commitments as we update them through the year. We've increased them or reiterated them, and then at the end of each year, we've come in at or above. And I say all this for a reason, because we're here again today to make you some promises, both about standalone T-Mobile and about the combination with T-Mobile and Sprint. And it's important for you to understand our track record when it comes to those promises. We take them very seriously, we take them personally, and we're here to give you some bold predictions for the future for our company. It's all based on what has been and what will continue to be a major growth story that is about serious differentiation in our market as the Uncarrier. And you know, the growth by now, you know, should be pretty obvious. We had 33 million customers when we talked to you in 2012. We now have 74 million customers in this business. That's 20 quarters in a row where we've led with total net adds in the industry across all categories. That's where we've had 1 million or more per quarter. That's 17 quarters where we've been the overall leader in the market. And now, out of that 74 million, which is double where we started, not only is that total impressive, but underneath it, categorically, we've led in the different categories. Now, this is probably my favorite slide in the whole deck. I'm just gonna stop for a minute while you soak that one in. What this one says is that over the last 5 years, we've been able, in postpaid phones, which is where the vast majority of the customer lifetime value sits, our performance has been 16.2 million customers growth. The sum total of Verizon plus AT&T plus Sprint plus now Comcast has been 1.3 million over those same 5 years. We've garnered 93% of all industry growth. We've done that by porting positively, by driving new growth in the industry, by catalyzing switching in the industry, and we're obviously very proud of it. We've done it with a differentiated brand, which I'll come back to in a minute. But it's not just been postpaid phones, the most valuable category. We've also led in prepaid. 6.5 million overall prepaid growth during these 5 years against the entire industry of 2.0 million, for more than 80% total industry growth in the category over the last 5 years. That's Verizon, AT&T, and Sprint, including their subordinate brands like Cricket and Boost, all totaled up have grown by 2 million units over the last 5 years. We got an early start in this strategy with Metro PCS in 2013 when we shared with you our aspirations. We rapidly expanded that brand, forced the rest of the industry to follow, and the results speak for themselves. Now, a big piece of how this has come about has been churn. And this is probably the metric I'm most proud of on the last 5 years of performance. Churn in the US market has come down categorically, but we've performed disproportionately, mostly due to the network, which we're about to tell you about, the performance and the results that we've been able to deliver across this network, but also due to a real breakthrough in our brand, our sense of who we are as the Uncarrier, and in the way we handle customers with our innovative team of experts concept. In 2012, when we spoke to you, at this meeting, that quarter, we had 2.5% postpaid phone churn. Last quarter, we had 1.07% postpaid phone churn, and we see continued opportunity for major improvement in that metric as we go forward. Obviously, the result of all this has been financial numbers that have been industry leading in terms of their growth rates. Our service revenues have been 75% growth, nearly doubling over the past 5 years. Our total revenues have doubled to $40 billion through 2017 over the last 5 years. Our net income has gone from what was obviously a very negative position in 2012 to a significantly positive position, and we see major opportunity there. Similarly with cash flow, major opportunity, which we'll come back to. And EBITDA has more than doubled, 129% overall growth since we shared with you our aspirations for the future back in 2012. All of this is based on an underlying set of differentiation, and that differentiation really is built fundamentally on the network. Neville, tell us.
Okay, thanks, Mike. So, hell of an exciting slide behind you right now, but 6 years ago, when we were here talking about, the future vision for this company, we had really not started anything on LTE. And much of that growth and the excitement, the tremendous, Uncarrier story that we've rolled out the last 6 years has been down to our ability to invest at an incredible pace, in this network. So between Mike, John, Braxton, and Tim, the financing and support of this company has been second to none, I think, globally. We've invested $40 billion in this network over that 5-6 year period. That's a statement. But we've also rolled out the technology at an incredible pace. So that map behind you now, that's our map. Those of you from the US, that is not the Verizon map. That's the T-Mobile map. And that was our vision and goal when we started this journey 5 years ago, to finally level the playing field in the US marketplace, take away the coverage differentiation that AT&T and Verizon had not just built their brands upon, but had built their businesses upon, and the strength and the margins that we look at. So
show us this movie
I
again.
got to do this all again for you, because it's kind of, well, this is a big thing of pride for me, obviously.
This is my new favorite slide in the whole thing, that one.
So there's a lot of the US. That's over 3 million square miles of geography on that map there. By the end of this year, we will be at 2.5 million. And that's exactly in pace and in line with the major competition that we chase from Verizon. Now, not only is the network, very broad in its coverage, it's also very deep. We've laid down an incredible layer of LTE. We've been adding to that recently with the 600 megahertz spectrum that we purchased last year. So that was an $8 billion investment. Chairman of the FCC has told me he's never seen spectrum rolled out as fast as what he's seen us do with 600 megahertz. We are rolling that spectrum out at a furious pace in the US. That's the big major component of our plan as we move through the balance of 2018. But our network is also the fastest in the US and has been for 4 years plus. So that's an incredible achievement. It's driven by the fact that we have the leading LTE network, the most advanced LTE network in the US. We have been the first and the foremost to launch all of the key new capabilities and features in LTE Advanced. be that MIMO, QAM, carrier ag, you name it. And that's how we've been able to drive this tremendous performance in terms of not just coverage, but speed and capacity. And we continue to maintain this lead. Hold this slide in your memory, and you'll see what is in front of us as we move into this combination with Sprint. Average speeds in the US, you can see us leading about 30 megabits per second. And what we can do going forward in this combination is incredibly exciting. We'll show you that in a second.
So think about these numbers for a minute. I want you to bear in mind what Neville just said about the network performance and the business performance. We just talked about industry-leading subscriber growth that blows everybody away. Revenue growth, both at the service level and the total level, that's industry-leading. In fact, we've pushed our competitors into declines in service revenues. Overall performance in EBITDA and cash flow that are very, very significant, and we're very optimistic about the future. And all of that is with no benefit at all yet in our business from the major investment that we've made in 600 megahertz. Think about that. We've taken you on a journey where we would spend billions of dollars, $8 billion on that spectrum, plus major investments prior to that in spectrum. And now we're spending capital to roll out that 600 megahertz. There's exactly no business benefit yet. All of the goodness of those investments we've made together are still in front of us. And we know how demonstrable that goodness is because we saw it on a much smaller scale with our 700 megahertz rollout. That we began in 14 and 15. Now that that's nationwide, it's been a major game changer for us to have that small slice of low band in places around the country, about 270 million pops. This is nationwide, and it's deep, it's huge, it's game-changing because it's both broad and deep. And exactly none of the run rate benefits are in the results that we shared with you. So let's talk about some aspirations for the future. This was our guidance at the beginning of the year, which was 2 to 3 million branded postpaid nets and $11.3 to $11.7 billion in EBITDA. We've subsequently updated that. It's now 2.6 to 3.3. EBITDA is 11.4 to 11.8 for the year. And you'll see a footnote here that due to an accounting change, the actual EBITDA guidance is now in a range of 11.6 to 12.3 billion dollars. There's a new revenue recognition rules in the U.S. So we're being hard on ourselves. This drives EBITDA up a little bit, but apples to apples, the old way of thinking about revenue recognition, the guidance is 11.4 to 11.8. CapEx remains 4.9 to 5.3 billion, and the CAGRs that we've previously expressed around cash flow still hold all the way through 19. Now, I will tell you, we have a developing story on cash flow beyond 19 that we're very, very excited about. It's too early to share it with you, but obviously this business is at a really interesting turning point through our journey. We've been making such massive investments in growth, including the 600 megahertz that we just talked about, that we think we're poised now to translate into serious, serious value creation for our shareholders. As a part of all that, we announced a buyback program of $1.5 billion late last year and began executing that. Our board of directors has also approved a $7.5 billion additional buyback program that I know Tim spoke to about yesterday. That's $9 billion, and this is in our standalone case. And so in the instance that we do wind up standalone, we'll get back at these buybacks for at least $7.5 billion more. That's the part we've already approved at the board level, and we'll watch as cash flow develops and see what makes sense there. We're very committed to this program. We think it's a nice way in this phase of our company's history to begin to return value to shareholders. So, let's talk about that standalone strategy for just a quick minute before we switch and talk about our aspirations for the combination with Sprint. Obviously, everything that we're talking about is based on a major, major differentiation that we've created in the market as the Uncarrier. And people sometimes ask us, all right, well, what's this thing really about, the Uncarrier? Is this about prices? Is it about value? What is it? And at its essence, being the Uncarrier, really what it means is being a company with fame around being obsessed with customers. That's the bottom line. And I just wanted to report to you that it's working. Not only in all those financial numbers and growth numbers that we talked about, but in some metrics that should give you confidence about the future. Things like what do customers really think of our company? Right now, we are hitting all-time highs when it comes to customer satisfaction Net Promoter Score, how we're measured in J.D. Power and other comprehensive studies of satisfaction. Not just all-time highs for T-Mobile, all-time highs in the history of the U.S. industry. In fact, the most recent J.D. Power score that we garnered, 828 points, was the highest score they've ever given to any company in our industry ever. Our NPS score is 1.5 times AT&T and Verizon's Net Promoter Score. Our Net Promoter, when we've interacted with somebody at retail, is 65 points. When we've interacted in care, it's 58 points. These are record highs in the history of our industry. So we're really happy right now with this covenant that we have with our customers. We've built a brand that's based on trust. Trust in the customer, that they believe we've got their back, we put them first, we treat them right. That's what all these Uncarrier moves we've done have been about. Yes, we're a great value, but one thing you'll notice is that value has been translated in terms of how we care for our customers, what they get when they invest in a relationship with us, because our pricing through this period has been relatively constant. In fact, we continue to outlook relatively constant ARPU, plus or minus 1% or so this year. And so this has not really been a story about pricing so much as it's been a story about what you get in this relationship with T-Mobile and what you get as a company that's got your back. Now, that's the foundation. That's the overarching strategy. Underneath it all, of course, is this network performance that Neville just reminded us about. And this is really about a network that has gone from, as you saw in his chart a few years ago, being a network that was catching up to a network that is second to none. We won't stop until it's best. In between those things, there's 3 simple strategies we're executing on. Taking this Uncarrier differentiation to more places and more people. We call that Uncarrier everywhere, number 1. Number 2, going beyond the smartphone. I showed you how we've kicked everyone's ass for 5 straight years in smartphones, both postpaid and prepaid. But we know the market is shifting. It's converging. All content and communications are moving from their linear formats to the internet. The internet's going mobile. We have to be positioned to take advantage of this converging world. That's beyond the smartphone. And finally, simplicity and digitalization. Yeah, these are actually one strategy. I'm not cheating here because they're highly related. In order to have a digitalization strategy in this industry, first you have to radically simplify everything about your operation. And I'll just touch on each of these briefly. First of all, when it comes to Uncarrier everywhere, it's about 2 things. And you've heard us already talk about the geographic expansion part of this. This has been a big part of our story over the last 2 years. We decided to invest in a major expansion in distribution to match that major expansion in network that Neville just reminded us about. We've gone from 3,100 stores in 2013 for the T-Mobile brand to 5,300, massively expanding our footprint. We now serve about 265 million Americans with retail. Within the footprint of our retail stores, out of 325 million total Americans. So about 4/5. I used to call this strategy going from 2/3 to 3/3. Now I have to shift it. We're going from 4/5 to 5/5 of the market with T-Mobile. Metro PCS expansion's been even more rapid. We moved from 4,500 stores to 11,000 stores nationwide for our Metro PCS brand. But the thing I want you to look at is this chart on the side. What it basically says is that throughout our history, we've been, generally speaking, a business that has been concentrated in urban centers with younger people, millennials, and with ethnic groups. That's been our strength. About 22% overall in urban areas relative to our overall share of 19%. By the way, within our 19% share, our share of postpaid phones sits right now at 16%. So I just showed you over 5 years, we've taken all of the growth in the industry, all of it, 93%. But the result of that is a 16 share. That shows you how far from behind we were coming a few years ago, but it should also show you how much opportunity and runway this business still has in front of it. 84% of the customers are still with the other guys, and they're coming to us at record rates. That 90% growth I talked to you about isn't just a 5-year CAGR. It was our Q1 2018 number as well. So this growth story continues right here, right now, as we change this equation. And where we're investing is some of these areas where we've been very underrepresented in the past. For example, business. We have a 4 share in enterprise. 4. 96% of enterprise customers are with someone else. So obviously, we've been investing big time there. Last quarter, business was 20% of our postpaid nets, nearing all-time highs. We have a 9 share in business overall because we're doing much better with smaller businesses. Suburban, we're focused on suburban prime customers. Right now, we're experiencing prime credit rating attach at activation that's some of the highest in our company's history as we push further into the suburbs with this distribution footprint I talked about, and also with offers that appeal to large suburban families. You may have heard about our push into older Americans, empty nesters, over 55. We launched last year an initiative called Unlimited 55 Plus, where we went after empty nesters with 2 or less lines with an incredible offer, targeted marketing, and investment in the community, a brand statement that isn't patronizing to people, you know, like commercials with big phones with big buttons, as if baby boomers and above, you know, don't understand technology. This is the industry that invented the mobile world we live in now, so they need to be treated with respect. We've learned how to do that, so we're having record numbers right now. In fact, 50% year-over-year growth with this segment. Military. Earlier this year, we launched T-Mobile One Military. And you might think, boy, that's awfully specialized. But remember, this is for military active duty people, veterans, and their families. That's a market that's more than 50 million in size in the United States when you include all that. We're killing it with military right now. It's fantastic. We have an incredible brand building with this audience. It's very important also for us to make sure that we share our values, that we care about this audience. It's important to people in the audience. It's also important to people in smaller towns and rural communities that resonate strongly with this message and with these values that are important to us as a company. And then smaller towns. By the way, 40+% of Americans live in smaller towns and rural areas. Our share there is 7. And what we're doing is not just expanding the network into these areas, but getting involved in the communities, sponsoring the high school football teams, getting involved in local charitable initiatives, highly localized marketing, and making sure people understand that we're here and we're here to stay. So the point of this chart is to make sure you understand that yes, we've been killing it for the last 5 years, but we're more excited now, right now, about our upside than we've ever been. Beyond the smartphone, the second piece is about a number of things, but one of the pieces is about making sure that we start to play in the converged world that includes people's homes. And we're going to talk more about this in the context of the Sprint combination in a minute. But obviously, media and content is very important. It's highly important and more relevant on mobile devices than it's ever been. We saw this a long time ago. We were the first to set data free for music. Back in 2014. In 2015, our major innovation called Binge On was announced, which changed the game completely when it comes to online consumption of video because it optimized video traffic, major advantages to network payload, but even bigger advantages to customers as we became the first company ever to allow video streaming on mobile devices at no extra charge. In 2017, we took it further with Netflix on Us, our exclusive partnership with Netflix that gives family plan customers on our flagship T-Mobile One offer Netflix for their family at no extra charge, indefinitely. Not a promotion, but a core part of our offer. And then finally, our acquisition of Layer 3 TV and our forthcoming launch of a T-Mobile branded TV services that will combine traditional types of TV thinking with cable channels along with over-the-top internet content, social media-fueled content into one experience on your big screen TV that's more integrated with your mobile life than it's ever been before. So we're excited about that. And then finally, 5G and IoT. And we're going to talk more about this one in the context of the deal, and you'll understand why it's so important to our company as we come together with Sprint. But obviously, standalone, we have aspirations here as well. 600 megahertz, our plan is to put 5G on our 600 megahertz layer and make sure that we're ready for the IoT world, but also ready to power smartphones nationwide, coast to coast with 5G, something our competitors are not doing. And finally, investing in technologies and capabilities and solutions beyond the smartphone. Things like our SyncUp line of products. We've launched that last year, late in 2016. We've already done 750,000 units of SyncUp Drive, the first product of many to come under that sub-brand. The final strategy in our standalone game plan is simplicity and digitalization. And this is really about radically simplifying everything we do in this business so that we can simultaneously bring up the experience for customers and bring down our costs. The center of it is our flagship offer, T-Mobile One, which radically simplified our offer structure and centered everything around one core offer that includes everything. But also, we're rethinking how we go to market in both retail and care. I'm not going to stop and take you through the details. I'll just tell you that for retail, the strategy is to remove the friction in this industry in switching. So many people would consider joining T-Mobile. They've heard about our brand, but they're like, man, that seems like a whole weekend of my life. Can't you make it easier? The answer is yes, and we're making big investments in how our retail works and how it's connected with digital to make that happen. And then finally in care, making it easier for our customers to get service. I want you to understand that this innovation we brought to market called Team of Experts is so massive in terms of a discontinuous way of doing business from our past that we are simultaneously experiencing right now the highest customer satisfaction rates in our history as measured through care, and the lowest cost to care for postpaid customers in our history. The highest satisfaction rates and the lowest cost of care happening right now simultaneously. So we'll tell you more about that later if you're interested. Okay. Now let's talk about the big elephant in the room, which is this announced combination with Sprint. We made this graphic. I like this part. There it goes. We are so excited about this. We announced this just 3 or 4 weeks ago, but as Tim said yesterday, we announced it after, as a culmination of years and years and years of work. I want to congratulate the team for getting this far. We have a lot of work ahead of us. But this is a big, big moment. I want to congratulate Tim, and I especially want to congratulate Torsten for the incredible work of bringing all of these parties to the table together, who've always known that if the circumstances were right, we could unleash massive, massive value by bringing these companies together. And that value release is all based on a proposition centered around network that I want Neville to talk about in a few minutes. But this company is going to be big. It's different than combinations that have been proposed in the past. Remember in 2011, there was a proposal for AT&T, the number 2, to purchase T-Mobile, the number 4, and thereby create the number 1. That didn't work out. Everybody's up to speed on that, right? And it didn't work out, obviously, for government regulatory reasons. This is about the number 3 merging with the number 4 to become the number 3. But a number 3 that is so much more prepared to compete over the long term in the future in a rapidly changing marketplace dominated by 5G technology with landline, wireline, media, video, and wireless all converging into an industry that rapidly is leaving all of the former separate industries behind. This company will be prepared for the future, and that's really what it's all about. Everything about it it is premised on supercharging what we just told you about, supercharging the Uncarrier. This thing that has made us so differentiated and so special in the market has taken to an entirely new level. We will be able to bring a level of competition into the face of AT&T, Verizon, and Comcast, Charter, and others sustainably over the long haul based on a premise that when you put these networks together, you get something really special. As we stand here on the precipice of 5G, when you put Sprint and T-Mobile's network capabilities and assets together and create one network based on the T-Mobile network, you don't get 1 + 1 = 2. You get a multiplying effect, and that's what I want Neville to talk about in a couple minutes. But first, I want you to understand that this is something we're doing not just because it's going to allow us to bring competition and hurt the duopoly, but because it's going to unleash absolutely amazing value for our shareholders. We've already told you that it's $43 billion in net synergies, just on the cost side. Now, obviously, there are lots of opportunities for revenue synergy here around new businesses that we can get into that we've begun to size, like tackling home broadband and bringing meaningful competition for the first time into home broadband. That's a massive opportunity. Video being expanded rapidly due to this combination, a massive opportunity. 5G private networks for enterprises, IoT commercial opportunities, lots of revenue opportunities. Zero of them are in this $43 billion synergy number that we've shared. It's mostly network. 26 billion of it is based on network synergies, but obviously, when you bring together two big companies like this, there are sales and service synergies, and there are back office synergies. So overall, net of the cost to achieve, $43 billion. And that obviously results in a company that over the long haul has very impressive aspirations. We think we can take the pro forma revenue picture from 76 billion, which is the current pro forma combination, to $100 billion in the longer term picture. Service revenues, we see ongoing growth in wireless service revenue of 2 to 4%, so we see $70 billion within the planning period. Adjusted EBITDA margins, we see growing into the 45 to 47% range in 3 to 4 years because we'll still be consuming the cost to achieve. So one thing I want to make sure you understand, this 45 to 47% margin is net of the cost to achieve, which are still being spent in the 3-year picture. Add another 4 to 5 points in that time frame on a gross basis for our margin when you put aside cost to achieve that'll still be being spent in year 3. So big opportunity for margin expansion, which we see in the 54 to 57% range in this business model. And then obviously a massive opportunity to unlock cash flow as we start to achieve, by bringing together these assets, we start to achieve some capital efficiency, which is part of the synergy picture. Capital cost avoidance based on the superior spectrum position of this combination is a big piece of it. So let's talk about the network that makes all this possible.
Thanks, Mike. So hopefully the industrial logic, click.
Just push it hard.
This is a 4G clicker. There we go. We're in the 5G world. So hopefully the industrial logic of what Mike talked about is very clear to you guys. We're going to take two networks, and we're going to take all of the customers, 130 million, and put them on one. And then that whole cost and expense stream that exists on the other network goes away. Simple math, right? That's how you generate $40 billion in synergies, the lion's share of it coming from the fact that there's one network there that we don't need. So finally, you have the cost structure and the scale that the duopoly has today. So our opportunity in front of us when we combine the spectrum assets and the network assets of these two companies in the way that we intend to do it, is we will create not just a great 5G network, we're going to create, hands down, the best network in the United States. So for me, from Capital Markets Day 6 years ago to today, to stand in front of this group and tell you that we now have within our sights, in a small period of time, the opportunity to take T-Mobile to the leading wireless network in the United States, one of the largest and strongest markets in the world. That's what this opportunity affords us. You saw the spectrum assets come together if you were watching the slide behind. 5G is about incredible capacity and capability. We'll talk about that a little more in a second. But we have already, as Mike mentioned, we've been rolling out 600 megahertz. And that's going to allow us to put down a 5G layer coast to coast across the nation. Nobody else is in a position to do that. AT&T and Verizon don't have fallow low-band spectrum to put 5G and touch the entire US. We also have millimeter wave assets. We may need some more, but millimeter wave deployed in the right environments, urban environments and dense urban environments, is a great capacity adjunct. And then the other exciting piece in the middle, Sprint has, as we all know, a lot of 2.5 gigahertz spectrum. That's kind of classic right down the middle of the road in terms of mid-band 5G as it's now being defined globally. In Europe, in Asia, most companies are chasing between 2.5 and 3.5 gig spectrum. There isn't any of it in the US that's available today. There is going to be some CBRS that will come next year. There's talk of some C-band coming out of the hands of the satellite guys. But the 2.5 gig asset that's there with Sprint is an incredible opportunity. Today, it's their LTE network. What we can do as we bring these two companies together is free up that 2.5 gig spectrum for an incredible layer of 5G capability. That's an amazing opportunity for us to finally make that 2.5 gigahertz spectrum sing. The biggest challenge that Sprint has had is they haven't had the network with the density and the coverage to really make that 2.5 gigahertz spectrum work. We have a much larger and denser network, and that 2.5 gigahertz spectrum on the T-Mobile network is going to perform incredibly better in terms of its coverage and also the capacity that you can realize from that. So if you think about this combination, it's an unmatched set of spectrum assets that we're bringing together. AT&T and Verizon are going to try and compete against this behemoth that we can create here with millimeter wave spectrum in the 5G space. That's an incredibly tough challenge. The US is enormous, right? And we all know millimeter wave is limited in its propagation and capabilities. It could take them years and $1 gazillion of investment to play catch up. So timing is key here. The ability for us to put these assets together at this foundational time as 5G is being birthed in the US marketplace with the scale and breadth of these assets is incredibly unique, but also incredibly exciting. We'll have the financial scale to do it, and we have a leadership team that knows how to do this stuff, and I'll talk about that a little more in a second. So let's give you a quick preview of what this network can produce. So there's a lot of discussion. This is a very important regulatory argument about how the combination of these two networks, it's not 1 + 1 = 2. You'll see, as this chart rolls out, on the left-hand side, you'll see 1 + 1 = 6 or 7. So why is that? Well, we're going to increase the density of the network, so there's more sites. We're going to put all of that spectrum on those sites, and then we're going to drive much greater spectral efficiency with the rollout of 5G. And the compounding nature, engineers in the room, this is intuitive to you, but explain it through. Sites times that spectrum times the spectral efficiency, we can create enormous capacity. This is incredibly important. We can drive a volume of capacity into the US marketplace for wireless services and fixed broadband and other services unseen in the US marketplace. So if you look at what we can produce, what we produce today, that's the little 3 exabytes a month sitting on the left there. Look at what we can do by 2024. It's an enormous capacity shift and growth. And then speeds, I referenced on the right-hand side, you can see the 30 megabits that was up on the chart earlier on. So average speeds, we can take that 15 times faster, over 400 megabit per second average speeds. 30 sounds like really, really old news to me. My goal and sights are set on orders of magnitude greater in terms of speed and performance. So this is just 2 dimensions of what we can do when we combine these assets together. Incredibly exciting. Okay, so Mike's touched on much of this already. I like to think about 5G as this arc of use cases. And we know over on what's your left-hand side, fixed broadband. That's going to be definitely an opportunity for us to go into that market, figure out the places where we can disrupt. Not everywhere nationally to begin with, but clearly the broadband market and the home market in the US is far from monolithic. There are a lot of places where there's very, very poor quality of service and very little competition. Gold mine for us to go and attack. We know on the right-hand side, the world of the Internet of Things. Much talked about, going to be a clear area of growth and opportunity in the 5G space, and we're going to have some unique coverage and capability to go at it with our low-band layer. And then I get super excited about the big piece in the middle. What's going to happen in this wireless space? If we were sat here 10 years ago when we said this is what's going to happen in LTE on your smartphone, we all got it wrong. We got it wrong. These are massive video and e-commerce platforms today, something we never saw coming. And with the capability that we will now put into these networks, with 5G, how consumers use and digest wireless services is going to dramatically change over the coming months and years. And 5G is going to enable that with many of those use cases that you can read on the slide in front of you. Okay, last but not least, in terms of how we're going to do this, I want to tell you we know how to do it. If I go back 5 years ago, we were talking about how we were going to combine Metro PCS and T-Mobile. And many people said, how on earth are you going to do that? It's a CDMA network and a GSM network. Well, look at what we delivered. Our track record is just incredible on what happened there. Rapid consolidation of the 2 networks, migration of the customer bases, an incredible over-delivery on synergies, plus 40%, almost $10 billion in synergies delivered, and churn, not a factor, de minimis. So we know how to get this done. This is a whole process of I like to say, not network integration. It's about migrating customers onto what we call the anchor network. That minimizes disruption for one set of customers. You build out capacity and capability, the landing pad for the migrated base. Sure, there are some of the Sprint sites we need to keep that make sense. We'll densify the network, then we migrate. And we have a much better starting point with Sprint than we did with Metro PCS. The Metro PCS customer base was CDMA voice only. There are 20 million plus customers with a fully compatible handset over on the Sprint side of the house. So when we build out our capacity and we're ready to start migrating, we already have a huge number of Sprint customers that can move across. Now, I'm massively simplifying what's obviously a complex process, but I'm standing up here to tell you I know how to do it. I have a team that knows how to do it, and we've done it. And the scale of what we did in Metro, believe it or not, when you break this whole Sprint business down, you break it down market by market, the scale of what we did with Metro PCS in many of those major markets was comparable, if not larger, than what we would take on with Sprint in terms of the size of the customer base and the sites that we have to work on in terms of decommissioning and upgrading. So we have a plan. We know how to go execute it. We're getting ready to go do this thing. Now we go take it through, the regulatory process. So quick wrap slide here, and I'll rattle down these and then hand back to Mike. So this world of convergence is upon us. 5G is going to open up any number of new business opportunities for us to go chase. We haven't even realized the benefits of the network we have in the ground yet. Now we're talking about a massive, massive upgrade in terms of what we can deliver going forward. We're the only company that can make this happen in the US at the pace and scale that is really going to introduce 5G and allow the US to maintain a leadership position in technology. Incredibly important for the US administration. That message is resonating very powerfully in DC with all the visits that Mike, myself, John have been making over the last 2 to 3 weeks. More importantly, it supercharges everything Mike talked about in the first half of our presentation today was about our Uncarrier, right? And what we've done and delivered over the last 5 years. We're going to take that and scale it in an incredible fashion and take it forward. We are not going to sit back on our laurels. We're going to take a far more aggressive, customer proposition into the market, better prices, better service, better quality, you name it, in all dimensions. And we have a track record and a history of doing that. We have a ton of credibility in the corridors of DC and in the government and with the US consumer that when we say we're going to go do something, we actually make it happen. We believe, we're confident in job growth, economic stimulation, in any number of dimensions. This is going to be an incredible opportunity for not just our customers, but our employees, our shareholders, and everybody within the business. It's a very, very compelling story. It's resonating very well in DC so far. It's early days, very early days, but we've had a whole series of very, very strong meetings and very productive meetings, and we're very confident in the outcome of the regulatory process. But Mike, let me hand it to you.
I'll just add 2 things to what you just said, Neville, because one thing I love is Neville's clear-eyed view on this opportunity. And he gets asked a lot, and we have been over the past 3 weeks, how are you going to integrate these networks? And he said it a minute ago, but I'll just re-amplify it. He says, I'm not. I'm not going to integrate them. We're going to migrate the customers to the T-Mobile network, and we're going to use the assets to make the T-Mobile network an order of magnitude better than it's ever been. And we can break down the numbers for you on that. But that's our integrated plan. It's not Neville's plan. It's our integrated plan with the Sprint management team. This is something we know how to do because we did it on Metro, and it's a winning strategy. And it's so different from what has come before. And it's also part of what unlocks this massive synergy. The second thing is people say, hang on, 5G. Are you really saying only because of this combination will there be 5G in America? And the answer is no. No, we're not saying that. Of course, AT&T and Verizon are doing 5G. Standalone T-Mobile and Sprint will do 5G. But what this is about, what Neville just told us about, is an opportunity to create a broad and deep nationwide 5G. In the critical early years of the 5G innovation cycle, something that absolutely will not exist without this combination. Think about it. Standalone T-Mobile will go broad with 600 megahertz and have 5G everywhere, but we won't have the depth for the kind of game-changing performances that Neville just told us about. 450 megabits per second? That wasn't one of these bullshit peak theoretical speeds the industry likes to spew. That is our actual forecast for the average. The average, actually the median, to be more specific, speed nationwide on speed tests within our planning period, not a dream or an aspiration, but a plan. Well, that's something that can only happen when you bring these two together. Meanwhile, AT&T and Verizon have made it crystal clear that what they plan to do is millimeter wave, sporadic 5G in some neighborhoods of some towns, with incredible performance in a few isolated places on the map. That's not the kind of game-changing 5G strategy that the US economy needs. So let me just wrap up by saying thank you for the opportunity to tell this story. I hope you understand after this brief talk that we're excited. We're excited about two things, and we hope you are too. Number one, we're excited about the standalone prospects of this business. We always have been. And hopefully I laid out for you why we are and the opportunity that we see ahead for T-Mobile as a standalone company. We're as excited about that as we've ever been. But we're even more excited about the prospect of bringing these companies together and unleashing an incredible value opportunity on top of that, of billions and billions of dollars of value creation that we have a clear-eyed plan on how to unlock. Now, last fall, when the deal didn't happen, we told the market, look, we are only going to do this deal, or any deal, if we're confident that we can get it done, that it's going to unleash incredible value for American consumers, and it's going to deliver incredible value for shareholders. And those set of circumstances didn't all come together last fall. They did this spring. And so we're confident in our standalone prospects. We're confident that this deal is going to get done, way more confident than we ever could have been last fall for a number of reasons. And we're confident that when it gets done, there's massive value creation. We'd love to open up a discussion about all of that, and because of that, I want to welcome to the stage the famous birthday boy, Nils Penn.
Yeah,